Upstart is an interesting business I've been following for a few years now. The company uses artificial intelligence to make lending decisions and claims that it can provide better performance at a lower cost. Also, many of my members have been asking about Upstart and how it will react to the recent stock market volatility after President Donald Trump announced the tariffs. If Upstart stock is a buy now as a result of the major price declines. Now, while I've been following Upstart stock for many years, I did a video about Upstart for 2025, and I told investors I didn't think the stock was a buy for this year. At that point, the stock was trading around $60 a share, and now it's at $35 a share. So does that change my recommendation? Do I now think the stock is a buy at $35 a share when the last time I visited the company, it was trading at $60 a share? So I'll evaluate the company's prospects, look at the new lower valuation, and answer that question if the stock is a buy on this dip. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Upstart has gone through a couple of different phases over these last 5 years or so. First, at the onset of the pandemic, the company benefited as people staying home, fueled with stimulus money, became better credit options, and went online looking for the kinds of loans that Upstart offers. Also, during those times, since the economy was performing very well, lenders were eager to lend money to the customers on Upstart's platform. Let me zoom out a moment. Upstart tries not to be the one to lend the money on its platform. It would prefer to just be a platform that brings together borrowers and lenders, and it just becomes a middleman that applies its model, its AI model, to rate borrowers and to inform lenders, hey, look, for this borrower, you should lend them up to this much money and you should ask for this interest rate. And then the lender can make a decision whether or not they want to approve that loan. Upstart merely acts as a middleman, providing the services to the lenders and borrowers. And in that regard, it's a lucrative business model if they can generate sufficient demand. The trouble was, as you see in starting in 2022, you see this big decline in revenue. This was not a result of people not wanting to borrow money anymore. There's always going to be people that want to borrow money. The trouble in these businesses is finding lenders, and that's what dried up for Upstart's platform. Lenders pulled back. This was when, remember, the Federal Reserve, the central bank, increased interest rates quickly to fight inflation, and investors were worried that was going to cause a recession. And so they pulled back. They didn't want to lend anymore, and that created a big absence of money on the platform. And so Upstart stepped in and said, you know what, even though we don't prefer to do this, for this moment, because there's such a lack of demand from lenders, we will step in and use our own money to make the loans on our platform. And so they've kind of continued that throughout these last couple of years, being a provider of some of the loans on the platform. Thankfully, for Upstart, starting 2025, there was robust demand from lenders. You heard me report on several multi-billion-dollar deals in this space. Upstart announced a $2 billion deal with a third-party lender that was going to add that capital to the platform to make loans, make that available. SoFi, which also operates in this industry, also secured a multi-billion-dollar deal with a third-party lender. Affirm also secured a multi-billion-dollar deal. And so you get the story. Investors were getting more excited about the personal loan segment because our economy in the United States was performing so well. Unemployment was still hovering at multi-decade lows. The economy was growing much faster than most economies in the world. And so there was a lot of enthusiasm in the market. That's all changing now. The announcement of the tariffs on all of the trading partners of the United States threatens to bring forth a recession in the US economy. It's going to result in higher cost of goods sold for all of these companies that are importing the products. And when consumers see higher prices, they spend less money. That decrease in economic activity is likely to reverberate around the economy and create an all-out slowdown. Already, we've seen over $6 trillion in wealth wiped out worldwide as a result of the stock market sell-off. And investors that have less money, they're going to spend less money. Businesses with the added uncertainty are not going to increase manufacturing. They're not going to make plans for growth. They're going to pause and wait and see and gather information to try and see what's going on. All of that means that Upstart, the lenders on the platform, are likely to pull back again. They're likely to say, wow, this is a dangerous category right now. This is the one that's most exposed to changing consumer circumstances. And so we're going to pull back. And so Upstart is going to experience the similar trend they experienced, in my opinion, back in 2022. But perhaps the degree could be higher, could be lower. Too early to tell at this point how consumers are going to react. But lenders are likely to begin by taking a more cautious note and pulling back from the platform. That's unfortunate because Upstart, when it creates activity and there's demand from both sides of its business, where it has consumers and lenders, the consumer side is always there, right? I mentioned there's always people that are willing to borrow money. But if it can get lenders to come online and continue to give loans, it generates lucrative margins. It already showed investors that it can be profitable on the bottom line and generate strong cash flow from operations back in 2021 when the economy was booming and lenders were very interested. And it was already doing that again here, rising up to 29%, given the positive performance in its business and the growing enthusiasm from lenders. That's likely to reverse again. As a result of the pullback from lenders on the platform. Now, looking at valuation, the stock is cheaper than it's ever been at a forward price to earnings of 15 and a price to free cash flow of 17.6. So the stock is trading at its cheapest valuation. That being said, it's also trading at one of the moments of greatest risk. Just like back in 2022 with the higher interest rates, the business is likely to face a significant negative consequence as a result of the slowing economy. So to answer the question, should investors buy Upstart stock on this dip here? I would say no, not yet. I would say let's wait a little while longer and see how the economy is reacting to the tariffs. How are consumers responding? Is there a major economic slowdown? Is there a major increase in unemployment? Is there a major increase in claims for unemployment insurance? Macroeconomic indicators, which we will get on a weekly basis going forward to discern how consumers are reacting. Because if we're going into a recession, one of the last businesses I want to own at the beginning of a recession is Upstart. Maybe during the middle or towards the end, when the valuation is much lower and we can see the end of the recession and we can see the economy rebounding, then we can become more interested in Upstart. But going into these uncertain times, this is one of the businesses I would not want to buy just yet. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.